story has been pretty sexy on Amazon for a long time. I'm looking at this going, man, $520 billion revenue business.
It's incredible.
It's absolutely incredible. All right, guys, Amazon stock. This was such a high flyer for so long, and people still believe in it. We're going to take a look at this company. Guys, Amazon has absolutely owned my brain. This company didn't make money for a billion years and then finally started making money. And even now, it basically only makes money on its AWS, Amazon Web Services, a very, very high margin business that a lot of other companies are getting into as we speak. Now, does that mean Amazon's screwed? No. Amazon is like Apple and they're trying to create an ecosystem. And guess what? They've done a really good job of it.
They've done a great job of it. It's incredible.
It's absolutely incredible. Let me ask you a question. If anybody out there wants anything, where's the first place you go on the internet?
Amazon.
Amazon, absolutely, without a doubt. And I get annoyed if I don't see something that's available for 6-hour delivery.
Yeah.
You know
Actually,
what I mean?
I ordered something yesterday afternoon and I was upset that it was going to be here between 10 and 2 today.
Yeah, isn't that incredible?
Because I wanted it overnight. I wanted it to be there when I woke up.
Oh, listen, I'll order things at 8 a.m. that are like coming 2 to 6 that day.
Yeah, it's amazing.
They've done a great job with that. So the question is, can they make money doing that? Well, let's take a look at some high level. So first off, in terms of Amazon, it hit a high of 170 back in March 29th of last year. So we're almost on the 1 year mark of its 52-week high. Its all-time high was 188 in July of 2021. And its low, $81 that just happened 2 months ago. 2 months ago. Now, here are some concerning things with Amazon. This gross margin. What is gross margin, guys? Gross margin is when you take your revenue and take out all your direct costs. What is the profit, the direct profit on every dollar of revenue that comes in? 13%.
Very low.
Very low. As an example, Apple is 43%. Microsoft is 68%. This is like car company low.
Yes.
This is lower than car companies. Tesla's 25%.
Yes, correct.
So this is kind of a concern. Now, I have people telling me, Paul, it's a growing company. Okay. It did $514 billion last year in revenue.
A lot.
At some point, it's got to start being a profitable company.
A lot.
It lost $2.7 billion. The free cash flow was down a lot. Now this one, we can look at the cash flow statement and look at how there was a big drop in free cash flow because they're investing so much in their infrastructure. And I 100% get that. 100% get that. They're investing a lot in their infrastructure in order to be able to provide more and more services for people.
Yeah.
But I will say one thing. Amazon Prime is wonderful for delivery. To use it for video?
No, it's a last-ditch effort.
Literally last-ditch effort. I only go to Amazon Prime when I go to that app Real Good, and it says available on Amazon Prime. Exactly. I'm like, all right, I'll go to Amazon Prime.
But even then, it's just a terrible platform.
Yeah, I'm not a huge fan.
Me either. It's my least favorite of the streaming platforms, the major streaming platforms.
So right here, market cap is exactly $1 trillion.
Nice.
Enterprise value is 1.25. This difference is essentially their cash against all their debt. If you want to buy the entire company with no cash on hand and no debt, 1.25 trillion. If you want to buy all the shares, it's $1 trillion. Mo, what was that face for?
How ugly the 8 pillars are.
Okay, let's pull up the 8 pillars here.
Super ugly.
Now remember, Mo has his own custom 8 pillars. You can do up to 12 pillars on your own with our software. And if you like this and all the other tools available in our videos, everythingmoney.com, $7, 7 days. That's $1 per day. No brainer. Try it out. You will be so glad just for the 8 pillars alone. Oh my God, Mo.
Bad.
And look at the ROIC is barely there.
Barely. I mean, if you look at my pillars that I created, I always do it greater than 12. That's not an X. I mean, that's not a check.
Yeah.
It's bad. It's bad for a company.
68 times earnings.
I know.
150 times free cash flow. And again, people are going to tell me, Paul, they're growing. I get it. And trust me, I was wrong in the past when I said, guys, they're a $40 billion revenue business. Now they're $520 billion revenue business. AWS is that's their big, we're making a ton of money here.
Yeah.
Great, but yeah, but guess what? They lose money selling products right now. Now, the advertising portion of their business is getting bigger and bigger. So if you sell on Amazon, you can advertise, same as Google AdWords. You can advertise on there and say, hey, I want to promote my product here and get people in there, etc. Wonderful. Very high margin business. And that's where I think the future of Amazon will be in terms of its profitability.
Right.
And I'm not saying that Amazon, I'm just sitting there saying, okay, let's just not assume just because it's
because it's Amazon and everybody uses it, it's going to work.
Yeah. A lot of mistakes have been made in the past when people assume I love a company, therefore I love a stock. Be very be very, very careful about that. You want to separate the company from the stock. Okay, let's take a look at a couple of other things. Analyst estimates.
I was reading the other day, the Andy Jassy experiment is not working. That's what they're saying. Now they're saying, we need to bring Bezos back.
So this is what happens, guys. This happens all the time. Yep. People sit there, a new person comes in, the stock goes down, they blame that person, right? Or they blame something to justify the stock price going down.
Exactly.
My guess is Amazon makes up such a big part of the S&P 500 and the NASDAQ that as these two indexes fall, Amazon's going to fall with it.
It's going to be a leader, just like it was a leader up.
The leaders up or the leaders down,
yep.
Especially in overvaluation, because at some point people will care. So, analyst estimates. Mo, check this out. Big growth.
Oh yeah, huge growth.
Wowzer.
Huge growth.
Hey, listen, if you knew for sure that Amazon's going to make $8 a share in December 2027.
I'm buying it.
Yeah, that'd be freaking 11 times today. You know, I mean, I look at going, well, maybe I wouldn't buy it today, but I'd at least really consider it.
Be on the radar. Yeah.
But guys, this has happened a lot in the past where analysts make assumptions, analysts make estimates, and they don't come through to, remember, they want to be like everybody else. Analysts are just like you out there. They don't want to be against the crowd. Mm-hmm. Go ahead.
Almost $1 trillion in 2027.
For revenue.
Yeah, it's almost there.
Listen, this is good growth rate.
Yeah, it's a really good growth rate.
This is really, really good growth rate. Again, can they sustain that? I don't know. Remember, in investing, your job is to be cautious and conservative, make reasonable assumptions on a company, and decide what to pay for that company. Now, before we do our stock analyzer tool, I want to let you guys know something. My personal opinion on Amazon is I'm waiting. Even if it was all great, if I saw that it was like, hey, our stock analyzer tool, we put in all our numbers and it pops up and says the stock's worth 100 today. I'm still waiting because I don't feel like I understand the profitability of this company going forward.
Yeah.
I don't understand how I don't understand this one number that just drives me nuts, the gross margin. I need to see a much higher gross margin there. Walmart has 25% gross margin.
Yeah, that's bad. When Walmart's beating you.
I look at this going, man. Now, could I be short-sighted? Absolutely. 100%. Remember, we look at all these companies and we have to determine what makes sense to us about the future. What part of this story? It is all a story when you do valuations. You're looking at the story of the company. And that story has been pretty sexy on Amazon for a long time.
Yeah, and it's not changing either.
And it's not changing. That story is the same story we've been hearing for a long time. They're immersed. You're immersed in their life. And that is 100% true. I live off of Amazon. I absolutely live off of Amazon. However, the question becomes, can they still make money doing that?
There was somebody that I met when I was in Naples. She has never bought a product on Amazon.
What?
She's never bought a product on Amazon.
Is she 94?
No, she's 30, 33, something like that. Yeah. She's like, I'd rather buy from anywhere else except Amazon. I'm like, okay, I get that. I get the principle of it. Man, maybe you don't like what Amazon does. Any company does. How do you do that?
So
that's a lot of effort.
There's a guy I used to live across the street from in Cleveland.
Yeah.
And in 2008 or 2009, when I moved away from that house, he had yet to have a cell phone.
Wow.
He has a cell phone now.
Of course.
Well, and that's the thing. Like eventually he's like, I don't want people being able to get a hold of me. I don't want this. I don't want attachment, etc. Now, hey Dan, how's it going? Oh, hey Paul. You know, it's like, okay, well you're on your cell phone now because eventually, I mean, you have to be.
I don't know how you're not. That blew my mind. Blew my mind.
How did this come up in conversation?
I don't remember, but we were talking about something and maybe I said, oh, I got it on Amazon. And she was like, oh, I don't buy on Amazon. Like when did you stop buying on Amazon? I've never bought on Amazon. Like you don't have Prime? Doesn't that just come with like when you're born, you just have Prime? I mean, seriously.
All right. So let's use our stock analyzer tool to determine a value on Amazon. Now, I know for myself, look at these profit margin numbers. I mean, they're just absolutely abysmal. So I'm going to have a wide range of my profit margin, which is going to give me a wide range of my value, especially considering I'm going to do a 20-year analysis, Mo's going to do a 10-year analysis. Guys, the world in which we live, if Amazon isn't around in the next 10 or 20 years,
that'll be crazy.
Absolutely crazy.
Yeah.
I don't even know what I would do in that world. How would I even function?
Yeah.
How would I even function in a world without Amazon 10 years from now?
Oh, I don't know. And they have the supermarkets coming, which I'm super excited about.
Has that one open on 18 yet?
They stalled the project.
Come on.
Yeah, it's just there. Now you can see the wires hanging out of the front and they just completely stalled the project. I think there was a write-up in like one of the journals that said something about how they just stopped. And it was supposed to be one of those grocery stores where you walk in, you put things in your cart, and you walk out the door, and it just knows what you put in your cart.
Oh, I love that.
It's incredible. I really want to try it, but I don't think we have any around us. Man, maybe Columbus. I don't know.
All right, Mo. So I'm gonna do a 20-year analysis. Mo's gonna do a 10-year. And again, every investment's the present value of all future cash flow, and that's what we're trying to determine here. What is that potential future cash flow? Sometimes it's a very narrow. Oh, this company makes this much money. Blah blah. Sometimes it's gonna be wide. This is going to be wide.
Yeah. I'm going to put in wide numbers, I'm telling you right now.
Yeah, we're going to have a very wide range of numbers, but that's okay. That's the whole point of analysis. You have to sit there and determine what your range of possibilities are, and you want to buy when it's below those ranges. So let's go ahead and do this, and then we'll come right back to it. All right, guys, so I just did this, and this software, this stock analyzer tool alone was used 1.3 million times last year by our users. This is the wide range. So first off, 20 years for me, 10 years for Mo. Revenue growth, I did 3, 6, and 9%. Mo, what'd you do?
I did 4, 8, and 12.
Okay.
And the reason I put 12 is the analyst said 12. That was about the average over the next 5 years. So let's see.
Okay. Profit margin. Look at this wide range I did, Mo. I did 3, 7, and 11%.
Fair. I did 2, 5, and 8.
Guys,
I just don't know.
I can see a world in which it's 11%.
So can I.
Now, with a gross margin of 13, it ain't ever going to be 11%.
Never.
But I believe that AWS, and as they figure out ways to save money and become more profitable, this could be a possibility.
Right.
Free cash flow margin, I did the exact same thing.
Yeah, I did the same. 2, 5, 8.
Okay. PE, I did 15, 17, 19.
I did the exact same thing.
Okay. And same with price to free cash flow.
Yep.
Now for your return, I did 10, 12, 14.
I went 10, 13, and 16.
Yeah, I don't blame you.
Yeah.
You know what? I'm actually going to change.
I was like, poof.
I'm actually going to change mine to 10, 12. No, I'm going to stick with 10, 12, and 14.
All right.
So what this means, guys, is using these assumptions, I want to sit there and get a 10% return if these are true, a 14% return over each year over 20 years if this is true, and a 12% here. Now, I have it on my watch list at 60. I hit the analyze button. Okay, low price of 22. High price of 115, middle price of 61. Mo, what'd you get?
Low price of 16, middle price of 47, and high price of 87.
All right, so I went really aggressive on a 20-year basis and even a 14% return. So guys, if you think this top level is gonna happen, you're buying this stock all day right now. All day, if you believe these things are gonna happen. And that's the hard part about investing. We don't know what's gonna happen. Guys, thanks very much. Again, everythingmoney.com, $7 for 7 days, gets you all this software plus all these other tools. And as it grows, that's included. Thank you very much for your time.